rates really a possibility. They could also say that the other component of the purchase programs, the APP, which is supposed to end by the end of the year, could be extended to June, as it is the case for PEPP that you mentioned. But there is certainly room later on for increases in those purchase programs. But as I said, in view of the recent data, they can also wait a bit because the expansion of the balance sheet of the ECB is continuing, which, for instance, has not been the case for the Fed since June.
Vitor, I want to ask you about this new trend in inflation targeting. The Federal Reserve conducted its strategic review and it came up with average inflation targeting. Now, the ECB is still going through its review, but do you think AIT would be useful at this stage for Europe?
Yes, I have tweeted about it and said that it's very likely that the ECB and other significant central banks will follow the Fed on that, because coming out of such a type of crisis, there may be price spikes, which are not necessarily inflation, but it is important that monetary policy is seen as allowing temporarily headline inflation going above the target, so averaging over a period of several years makes sense in these type of situation. So I think it's likely and even perhaps desirable that the ECB and other central banks will follow the Fed on that.
I'm curious about your view on whether Fed policy at this stage is impacting the ECB. I mean, we've seen a real weakening in the US dollar and an escalation in the euro as a result of Fed policy to an extent. What do you make of the concerns that the ECB should have at this point that the Fed is outmaneuvering them?
Yeah, well, they have to be monitoring the situation closely, but this recent development of the exchange rate is due to the increased credibility of European cohesive decision-making, meaning the 750 billion of the recovery fund, and at the same time, the exchange rate has been now stabilizing around 117, 118 against the dollar, which is exactly the same value of January 1999 when the euro started. And the very recent IMF publication about the external sector puts the euro in July slightly undervalued, not overvalued, and the current account of the euro area is positive to the tune of 2.7%. So all these indicating that the recent levels of the euro exchange rate will not hamper the recovery. So monitoring is certainly due because the exchange rate in the end also affects inflation, but at the present levels, it should not be a cause of overconcern.
Mr. Constancio, I'm just interested in the research that's been done that shows where inflation has come back into the system. And there has been inflation in various asset prices, bubbles in markets, bubbles in property and what have you. So rather than looking at the 2% narrow target of CPI, isn't it fair to say that ECB policy and central bank policy around the world has created mass inflation? It's created asset bubbles.
Well, there is this concern, but part of it, not bubbles, but the increase in the price of risky assets, it's part of the goals of the expansionary monetary policy that the central banks had to adopt. And think about what would have happened to markets in general if the central banks had not stepped up their expansionary policy of large purchases. So the markets really went down severely in March and then have been stabilized by the action of the central banks. So all policies imply trade-offs. They have collateral effects. But the priorities have to be very clear, and facing these huge recessionary shock, central banks had to embark again into these type of expansionary policies.